Ladies and gentlemen, good day and welcome to Unicommerce eSolutions Ltd Q1 FY25 earnings conference call hosted by IIFL Securities Ltd. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishi Jhunjhunwala, Senior Vice President and Lead Analyst for Technology Sector at IIFL Securities. Thank you, and over to you, sir.
Thank you, Zico. Good morning, ladies and gentlemen. Thanks for joining us today for the first quarter FY25 and the first ever earnings call of Unicommerce eSolutions Limited. On behalf of IIFL Institutional Equities, I would like to thank the management of Unicommerce for giving us the opportunity to host this earnings call. Today we have with us Mr. Kunal Bahal, Promoter and Non-Executive Director, Mr. Kapil Makhija, Managing Director and CEO, Mr. Anurag Mittal, Chief Financial Officer, Mr. Bhupinder Garg, Chief Technology Officer, and Mr. Deepak Gupta, Director Strategy and Investor Relations. With that, I'm going to hand it over to Kunal to take the proceedings forward. Thank you, and over to you, Kunal.
Thank you, Rishi, and good morning, everyone. Welcome to the Q1 FY25 earnings call. This is our inaugural earnings call for Unicommerce eSolutions Limited. I'm delighted to have with me today Kapil, Anurag, Bhupinder, Deepak, and our investor relations advisors from SGA. We are incredibly humbled and deeply grateful for the overwhelming response Unicommerce has received to its IPO. This milestone is the culmination of years of hard work and dedication from our entire team, and we are very excited to embark on this new chapter as a publicly listed company. Unicommerce's journey began with a simple conversation in a coffee shop back in 2012. The vision was not merely to create another company, but to fundamentally transform the e-commerce landscape in India. Over the years, we have steadily grown, achieving significant milestones and establishing ourselves as a leader in this space. As a picks and shovels company, we are uniquely positioned to grow alongside the expanding e-commerce industry. Under the leadership of Kapil, Bhupinder, Anurag, and our exceptional team, Unicommerce has emerged as a clear market leader, processing 850 million order items annually for over 3,500 brands and sellers across 6 countries. Given the exciting long-term prospects of the Indian e-commerce market, we are confident of Unicommerce continuing to be a compelling growth story. With that, I would now like to hand over to Kapil to share his insights. Thank you.
Thank you very much, Kunal. Hello and good morning, everyone, and thank you for joining on the maiden earnings call of Unicommerce eSolutions Limited for Q1 FY25. We are excited to meet all of you and share with you our company story and how the first quarter of this fiscal has been, what is driving growth for us, and where we are headed. I will start with a brief overview of the company. Incorporated in 2012, Unicommerce is an e-commerce enablement software as a service, which is SaaS platform in the transaction processing and order fulfillment layer. The company enables end-to-end management of e-commerce operations for brands, sellers, and logistics service provider firms. As a consumer, when you order online, you see the website on which you order and the delivery person who comes to your doorstep. Whatever happens between you pressing the buy button and the product being delivered to your home is powered by Unicommerce. We are the behind-the-scenes backend that powers operations and smooth customer experience for a brand or a seller. Unicommerce's suite of solutions act as a nerve center for e-commerce fulfillment operations, ensuring that the orders received are processed correctly, efficiently, and within timelines as per the client needs. Our products aid in streamlining e-commerce operations for clients, enabling us to become an integral part of our clients' supply chain infrastructure. The growth of the e-commerce enablement stack is directly linked to the rise of e-commerce sales. Brands and retailers are increasingly engaging customers through multiple channels, both offline and online, and these could be various marketplaces, both horizontal and vertical, their own website, and many other touch points. As India's e-commerce sector continues to grow, businesses and retailers are encountering complex and substantial challenges in scaling their operations effectively. Key hurdles include managing inventory across various locations, reducing fulfillment costs, processing orders from multiple online and offline platforms, handling returns, generating accurate invoices, complying with taxation and other regulatory requirements, etc. Because of this complexity of the e-commerce ecosystem, brands and sellers need a central system which can seamlessly interface with all ecosystem players such as marketplaces, website platforms, logistics players, fulfillment players, ERPs, point of sale, etc. Unicommerce is this centralized system that enables brands and sellers to focus on growing their business without having to spend a lot of time managing their day-to-day operations. Unicommerce, with its extensive 250 plus plug-and-play integrations, provides brands the flexibility to choose the service provider that's best for their business, secure in the knowledge that the service provider is already integrated in the workflows and with the ecosystem. Any new innovation that happens in e-commerce, such as quick commerce or ONDC that have happened in recent times, add to the complexity for a brand and further strengthen the need for our solution, and these new models become a new channel source for us as we integrate with all these models. We stand for simplifying e-commerce and shielding the brand from the entire complexity through our comprehensive product suite. E-commerce is a fast evolving industry with new trends coming up very often. For example, direct to consumer and omni-channel were fringe use cases until a few years ago and now have become mainstream. Similarly, quick commerce has now become a salient contributor in many categories. Because of the fast evolving nature of this industry, clients value a cloud native and a SaaS solution like Unicommerce, which can evolve as the market evolves and is able to incorporate new integrations and new workflows, shielding clients from the complexity of continually adapting to the new developments. Unicommerce serves a diverse base of 3,500 plus clients across many industries. Our platform is sector and scale agnostic. From fashion to pharma, from home services to home decor, and much more, we serve a wide range of industries. And our platform is flexible to work with a large enterprise processing millions of orders in a month to a small SME processing a few hundred orders per month. Our solutions can be configured to cater to use cases of different industries under a single implementation, and this makes us relevant for house of brands and brand aggregators as well. Our role comes in the post-purchase journey in the transaction processing layer and order fulfillment layer. Unicommerce enables its enterprise clients and small and medium businesses to efficiently manage their entire journey of post-purchase e-commerce operations through a comprehensive suite of SaaS products. I will now give a quick overview of our 6 solutions. Our first solution is the multi-channel order management system, or OMS. This enables clients to aggregate orders across all marketplaces and websites at one place. More importantly, it allows sellers to maximize sales from a common pool of inventory. By automating this task, sellers can run the business with leaner teams. For Q1 FY25, we had a run rate of processing 850 million plus order items through the OMS. Until end of Q1 FY25, we had 250 plus plug-and-play integrations across marketplaces, web stores, logistics providers, ERP, point of sale, etc. to enable automated flow of order information to be processed through OMS. Our second solution is the Warehouse and Inventory Management System, or WMS. WMS enables efficient management of day-to-day warehouse operations and helps management of inventory distributed across the warehouse network. We are an e-commerce first WMS, which ensures that e-commerce specific workflows such as returns management, prioritizing picking for a particular channel, etc. are available off the shelf. Till end of Q1 FY25, WMS was deployed across 8,300 plus client warehouses of varying sizes. Our third solution is the Omni-Channel Retail Management System, or Omni RMS. Omni RMS streamlines retail by merging all offline and online sales channels on one platform. Brands are rapidly going omni-channel, with digital-first brands expanding offline to expand consumer reach, while offline-first brands are going online to get a direct connect with the consumers. Our Omni RMS solution allows brands to power various omni-channel use cases such as ship from store, which means an online order will get serviced from the store that is nearest to the customer, or endless aisle, where the store can order online or on behalf of a walk-in customer for a product that is not in the store. During Q1 FY25, Omni RMS was implemented across nearly 3,000 stores. Our fourth solution is the Seller Management Panel for marketplaces. Seller Management Panel helps marketplaces work with third-party sellers. It allows third-party sellers to commit inventory directly on the platform, including available quantities. Once the marketplace receives orders for these products from customers, they can be allocated to specific sellers who fulfill orders directly from their location. During Q1 FY25, our seller panel products collectively managed over 2,000 plus sellers on behalf of our client marketplaces. We discussed so far our solutions in the transaction processing layer. Now let me give you a brief on the order fulfillment layer, where we have recently launched two new products, that is Uniship and Unireco. They are currently in the build phase and we continue to evolve the products based on our clients' feedback. Uniship simplifies order tracking, returns, and exchanges on the brand website. The default experience on a brand website is fairly broken when it comes to forward or return flows, and this solution helps automate that. It essentially provides a smooth forward tracking and returns management experience on the brand website. And Unireco simplifies payment and returns reconciliation across marketplaces. Brands face challenges with respect to marketplaces overcharging, pending payments, and no view on pending returns or lost returns. Unireco solution helps provide visibility for such overcharges, missing returns, etc., so that brands can take appropriate actions to recover the same. That was an overview of our 6 solutions. Our vision is to become a one-stop shop for e-commerce enablement, as we are increasingly seeing brands preferring to use all the solutions under a single umbrella. I'd like to share very briefly case studies of 2 of our clients to illustrate the direct impact we have on our clients' businesses. For a leading BPC player with an ARR of 300 plus crores, our platform helps achieve an impressive 80% drop in order returns and cancellations. And for a leading gifting platform with ARR of 200 plus crores, our platform helps achieve 50% faster dispatches. These clients have deployed our OMS and WMS solutions. With our extensive range of solutions, we have been able to create a large, growing base of marquee clients across the retail and e-commerce landscape in India, as well as consistently onboard new clients in international geographies. We serve ever-popular legacy brands such as Imami, Fab India, Cello, etc., as well as many leading digital-first brands such as Lenskart, Mama, Boat, etc. Till the end of Q1 FY25, our annual transaction run rate stood at 850 million plus, enterprise clients at 850 plus, and SMB clients at 2700 plus. Our enterprise clients account for 90% of our revenues. Our SMB customers contribute the remaining 10% of our revenues. And over the years, we have observed that as SMB clients scale up, they require more solutions, and hence some of them are upsold to our enterprise plan. I would now like to highlight the strong pillars of our business model. First, ours is a pure SaaS business model, where revenue comes from purely platform usage with no people service components. This enables us to have a high gross margin. Second, our platform is extremely sticky due to our deep integrations with the various technology processes of a brand, making us a lifeline for the e-commerce journey of a brand. Third, our revenue is linked with the number of transactions. Our enterprise customers, which constitute nearly 90% of our revenues, pay us a minimum subscription fees each month, in which we bundle a certain number of transactions in this cost. Once they utilize this quota of transactions, they pay us an additional fee called the usage fees for the additional transactions they process. Given that we charge per transaction, we are inherently set up for growth, as e-commerce transactions in the country have grown and will continue to grow. Fourth, we have a fairly dominant position, being the largest player in the transaction processing layer by revenue for FY23. Fifth, we have an optimized cost structure, leading to healthy profitability, thereby leading to us being PAT profitable since FY21. We are the only profitable player amongst the top 5 players in the transaction processing layer based on FY23 numbers. Sixth, our revenue growth is driven by 3 cohorts of customers. Customers we acquire in the current year, which we call as the T0 cohort, customers we acquired in the previous year, which we call as T-1 cohort, and which ends up more than doubling in the current year as we acquired these clients through the year last year. So on an average, we only got 6 months of revenue from them last year, and we get at least full year revenue from them this year. And then there is the T-2 or before cohort. The growth of this cohort is driven by what we call as NRR. NRR is net revenue retention, which means that if NRR is 110%, the cohort of customers that paid us 100 rupees last year pay us 110 rupees this year. We have consistently maintained 100% plus NRR over the years. Given this construct, a large part of our growth comes from our existing customers itself. Looking ahead, the market for e-commerce enablement SaaS presents a substantial and growing opportunity. Key growth drivers for this business will be, first, e-commerce growth. Currently, the e-commerce market in India is highly underpenetrated. In India, 4 to 4.5 billion shipments were processed last year. By comparison, 130 plus billion shipments were processed in China last year. This shows a significant headroom for growth for the e-commerce market in India. We have also demonstrated a market plus growth rate consistently. When the market during the pandemic years, as per our estimates, grew at about 30 to 35%, we delivered a 50% revenue growth. Last year was arguably the slowest year that I have personally seen in the last 9 years of my journey at Unicommerce, where the market, as per our estimates, grew late single digits. We delivered a 15% revenue growth in FY24. The second growth driver is new client additions. The e-commerce industry is currently underpenetrated, and there is a large scope for the company to add to its existing client base. There are many categories that are yet to go online in a big way, and many traditional brands that are yet to adopt being direct to consumer and omni-channel in a big way. The third growth driver is new products. Our vision is to become a one-stop shop for e-commerce enablement, and hence we recently launched 2 new products, and we will continue to offer more solutions so that the ecosystem can fulfill all their needs of e-commerce enablement from a single place. The fourth growth driver is international expansion. We are already present in 6 countries outside of India, and our focus would be to go deeper in these geographies across Southeast Asia and Middle East and deliver growth. While e-commerce is an overall fast-growing industry, Unicommerce has built multiple strong moats that give it a competitive advantage. These are an extensive suite of 250+ integrations, which continue to grow every quarter along with a stable and scalable platform. Second, our long-standing customer relationships due to the sticky nature of the product. And third, our deep partnerships with various ecosystem players. So together, these help drive a strong network effect, which is creating a virtuous cycle of growth and profitability. Summarizing the key trends and initiatives for this quarter, we continue to add enterprise customers at a steady rate despite the softness in the overall e-commerce market. We added nearly 1 new enterprise customer every day in Q1 FY25. These customer additions should help in revenue momentum in the coming quarters. We continue to invest in new products and evolve our existing products, while our core business continues to demonstrate a strong operating leverage. Some of the initiatives include enabling integration for 4 leading quick commerce players, enhancing our returns management module, and building Unireco. We have also launched an AI tool, UniGPT, utilizing Gen AI to assist e-commerce sellers. In summary, looking ahead, we are optimistic about the future and confident in our ability to navigate the e-commerce landscape and deliver long-term value to all our stakeholders. I would now like to invite Anurag Mittal, our CFO, to share the financial performance. Over to you, Anurag.
Thanks, Kapil. Hello and good morning, everyone. We are happy to report a good performance for the Q1 FY25. During the quarter gone by, our revenue for the quarter grew by 9.2% year-on-year and stood at 274.7 million in Q1 FY25 compared to 251.6 million in Q1 FY24. We expect this growth momentum to continue, as generally H2 is better than H1 due to the festive season sales. Our adjusted EBITDA for the quarter grew by 23.2% year-on-year and stood at 44.7 million. As we continue to reap the benefits of operating leverage, our adjusted EBITDA margins grew by 185 basis points year-on-year to 16.3% in Q1 FY25 compared to 14.4% in Q1 FY24. Our profit after tax grew by robust 30% year-on-year to 35.12 million in Q1 FY25. Also, as Kapil mentioned, we are working on developing various new products in the e-commerce enablement space along with enhancements to the existing products. Over the years, for any enhancement we have made to the existing products, the costs have been expensed in the profit and loss account, and we continue to do the same. However, as we are working on new products, the costs related to it have been capitalized as assets under development on the balance sheet to the tune of 21 million in Q1 FY25. Further, we are encouraged by the initial traction from alpha customers for our new products. The feedback from these early adopters has been positive, suggesting that there is a meaningful demand for our new products. This positive response validates our strategic decision to invest in these new technologies and strengthen our belief that they will contribute significantly to our growth trajectory in the coming years. To summarize, our sustained investment in the existing products, combined with the development of new products and the operational efficiencies provided by a scalable model, position us well for the future growth and profitability. With robust initial traction across our new products and the benefits of operating leverage continuing to play out, we are optimistic about our ability to capitalize on these investments and drive long-term value for the company. Coming to few KPIs for the quarter. Our annual recurring revenue as of Q1 FY25 stood at 1,099 million. Our net revenue retention ratio from enterprise clients continues to be 100% plus for many years, reflecting steady revenue growth from contracts with our existing customers, thereby indicating sticky client relationships. Our enterprise clients as of Q1 FY25 stood at 855. The annualized run rate for the number of order items processed basis Q1 FY25 stood at 850 million. Our client concentration from top 10 client revenue stood at 21%. With this, I would now like to open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Payal Shah from Billion Securities. Please go ahead. Ms. Payal Shah, may we request you to unmute your line and go ahead with your question, please?
Hello. Am I audible?
Yes, ma'am. Please go ahead.
Yeah. Good morning. Thank you so much for the opportunity. I have a question. For overall, the FMCG and retail sales have been slow over last year or so. So what are the trends that are visible to us? Hello?
Hi, thanks for the question. So we have seen the overall e-commerce. We are an e-commerce enablement SaaS platform. So overall, we have seen that e-commerce grew strongly during the pandemic. But since end of Q2 last year, we have seen some softness that we've seen in the e-commerce overall growth. And the overall festive season also continued to be subdued last year. We are seeing some recovery now happen in the e-commerce growth at the end of Q1 for this financial year and hope to see higher growth in the subsequent quarters. But as of now, we have seen softness in the e-commerce growth as we've seen in the retail as well.
So just to follow up to my question, like how do we see the demand? What kind of growth are we expecting for e-commerce for this fiscal?
So we have, as I mentioned, we have seen some softness in the e-commerce growth, but we have seen some recovery at the end of Q1, and we are hopeful with now the demand picking up, we will see higher growth in the subsequent quarters. I think it will be very early for us to predict what the growth will be, but we are seeing some signs of recovery already and hopeful that the subsequent quarters will demonstrate a higher growth going forward.
Okay. That's it from my side. Thank you.